Welcome to TheoTrade. This is Don Kaufman. You're joining me on April 16th, 2016. This is our weekend edition. Well, first of all, what's on everybody's mind? It's the meeting of OPEC and non-OPEC countries tomorrow. That is going to be Sunday. What can you do about it? Nothing. Absolutely nothing at all. Obviously, the markets are closed. Nevertheless, when the futures do reopen on Sunday afternoon or evening, depending upon, of course, what time zone you are in, could be a little bit interesting. It's something worth kind of tuning into. And again, what I am speaking of is this Sunday meeting of OPEC and non-OPEC countries to possibly discuss the freezing of oil production. So there's all kinds of conjecture around this particular meeting. But what I want to look at is really, really simple. And what's that? Okay. I just want to key into right here, right? Look at the 4-day options. Look at the 6-day options. The 4-day options, 6-day options in the SPX. I don't care what the meeting happens to be, okay? None of my business. But I do want to key into the fact that if this meeting really held some serious risk for broader markets out there, don't you think the implied volatility would actually be reflecting that to some degree? Wouldn't the implied volatility be reflecting that? And what I notice is the exact opposite. The implied volatility right now is absolutely rock bottom. Look at this, 4-day expiration, 10% implied volatility. Ladies and gentlemen, it doesn't get much lighter than that out there in terms of implied volatility. So I don't want to take away from the fact that the media has been playing this up huge, but nevertheless, that oil meeting over there doesn't seem to hold much of a threat, if you will. Even the 6-day options out here, those 6-day options, look at this, a $26 expected move, and that's light. Now, this past week, we did see kind of a follow-through of a rally over here, but this is still well within the expectations. If you kind of look back in 1, 2, 3, 4, 5 days, okay, we were still within, okay, a very normal expected move, and that expected move, what I'm referencing is the previous week's expected move. Well, why worry about the past? Only worry about what's coming. What is coming? A lot of earnings, okay? This meeting going on Sunday, and still the volatility absolutely rock bottom over here. Again, $26 expected move, and that is through next Friday over there. However, let's take a little bit of a look around the markets over here. Specifically, let's look at energy. So I bring up, of course, the XLE. Why the XLE? Because it's the energy sector. Is the energy sector kind of feeling the pinch of volatility here? A little bit. So what we're looking at now, okay, happens to be none other than a 6-day expiration here versus, for instance, the 13-day expiration. And we do see a little bit of a differential, okay, and deviation in volatility, just about 4 points. Nothing drastic, though. The 6-day expiration is holding about a $2 expected move inside of the XLE. And again, an event like this coming up this Sunday, it's nothing more than a binary event. And if you guys have never really heard that term, the binary event, it kind of comes from, what is binary? It's a 0 or it's a 1, okay? What that basically means is a binary event, it's a coin flip. It's a heads or it's a tails. Either we're going up, okay, or we're going down. And this marketplace, though, sure, it's pricing in a little bit of a binary event, but it's nothing substantial. Like everybody's all very worked up about it. Again, nothing too huge that I see. I will definitely watch the futures, though, coming into Sunday afternoon. It's afternoon for me because I'm on Pacific time. Nevertheless, it's worth watching, right? Everybody wants to tune into the futures to see a train wreck. Maybe, just maybe we get that. Now, we've kind of gone through a little bit about expected moves both in the SPX and in the energy sector, because right now they're on really the forefront of the discussion. However, I'd be remiss to not mention what led the markets this past week was none other than the XLF. Okay, what is it? It's the financials. And sometimes, you can look at an entire sector, but I prefer to look at the ETF specifically, because forget about like a sector. People talk about, this sector and the IT sector. Okay. Listen, how do you trade the IT sector? Probably the Qs. How do you trade the financials? Well, you could trade the individual financials or the individual, technology companies. Me, I prefer to look, though, specifically at the ETFs. And this ETF here, the XLF, was a rip-roaring good time this past week. All right. So the XLF takes off from, again, just the last couple of trading days, 22 explodes up to 23. All right. Closed at 22.90. Give or take a few pennies over there. It's still a very large move. What has me a little surprised, okay, is many of the earnings are out in the financial sector, but we do have still some big ones coming up, all right? One of the biggest releases of earnings this coming week, and this coming week, again, this is where we get to the earnings superstars out there. Yeah, we're going to get stuff like Google. We still got to pass through things like Goldman Sachs, though. And what we are seeing in the XLF, though, is a little bit askew in terms of implied volatility. And that basically means you're actually seeing, all right, the 6-day options price as high as almost 20% vol. The 13-day options, okay, are sitting out there at about an 18 vol. Now, the reason I'm pointing out the XLF isn't necessarily because there's just earnings coming out. The real reason I'm pointing out the XLF, there is still, okay, this large perceived risk in this product, and it has not abated. The marketplace is telling you something over here, and I don't think a lot of traders are really keying into this. So this entire past week, we've seen the markets rally substantially. Okay, and I'm going to come back into the financials in a moment, and there's a reason I'm going to come back into the financials in a moment. But we've seen markets, that's the SPX and so forth, and when I say the SPX, and I'm talking about the S&P 500 rallied, right? No two ways about it. However, the bonds, okay, have been nothing but rally with the S&Ps lately, which takes the interest rate, the yield associated, and this happens to be the 30-year, it's actually taking interest rates down. That has historically been very, very negative for your financials. Now I go over to the ZN. The ZN has to be what? It's the 10-year. Now, this is the big boy. This is the one that all the banks are out there trading. This is the one, okay, that everything from mortgage-backed securities, they're all based on the 10-year Treasury. Again, explosive rally to the upside. Fades out just a little bit this week, but ends the week on a rather strong note. Interest rates couldn't be lower than they are right now. Or could they? Yet, the XLF continues to chug along to the upside over here. However, one thing that hasn't really backed off are the implied volatilities. And the standout to me is if you look out here at about 34 days out, okay, and I'll just zoom in right there to 34 days out, okay, look at the volatility. It's just about 19.5%. And then compare that to the SPX, the exact same expiration. Let's actually compare it to the SPX, which here's a 33-day, right? And over here, what do we have? 14%. Okay, the differential of implied volatility is still drastic in the XLF, which has been one of the leaders in the market. The world is still perceiving considerable risk to the financials. Have we seen some of that risk, okay, kind of rear its ugly head? Absolutely not. Markets have done nothing but rally over here. But what we're looking for is signs, okay, what's ultimately bubbling up in the market. I'm telling you, the marketplace to watch is specific to the financials over there. For some reason, traders are bidding up volatility in the financials, continue to bid up volatility in the financials. The other thing, okay, I don't like the way it looks right now. Why are the bonds sitting at 166? Okay, this is bonds over in what I kind of call Armageddon land. I mean, hey, we're not at the all-time high in bonds. Yeah, but we're only about a point or two away All right, yeah, this is a big, wild, reactionary high in here, but we're only a point or two away from some of the recent highs. You got to watch the bonds throughout the course of this coming week. I know everybody wants to key into earnings over here. They're very exciting. So we're going to take a look at some of the earnings, but you have to ask yourself in this marketplace, do you think earnings really matter? Now I'm going to bring up Citi. Why? Because Citi had earnings. And if you ever looked at the news on this, you're going to realize, and again, I'm going to leave you to decide for yourself, but if you look at the news over here, do you really think that the earnings matter? All right. Citigroup profit plummets as trading and investment banking stall. It just goes on and on and on and on and on. By the way, they also lowered guidance a number of times over here, but they turned around and beat expectations of a drastically lowered guidance. Again, and their profits and revenue declined sequentially. Do the earnings ultimately matter? We can still trade around earnings, but again, getting detailed into the fundamentals of it, I throw it out the window. If you want to consume it, go for it. Now, let's actually go over and take a look at some of the earnings that are coming up this week. All I did here is just scanned. I don't scan the entire universe and the entire world. No, I scan the weeklies. It's stuff that I'll be able to trade, right? That if it has weekly options on it, I just go earnings, has earnings anytime in the next 5 days. Okay, and there's like 56 companies, so you can even cut that down if you want here just a little bit. You want to cut it down to like 4 days? Listen, this is going to be big earnings this week. Google, Goldman Sachs, IBM, Intel, all right? And it's not over yet. It's Microsoft. We're going to be talking about earnings all of this week here at TheoTrade. You got to tune in on a day-to-day basis because we're going to set up a couple of different earnings trades. Some of them you're going to love. Some of them you're going to hate. Don't worry about it. Netflix, I have a love-hate relationship at $111 stock. Again, tune in all this week and enjoy the futures that are going to be opening on Sunday evening over here. Again, Sunday evening, the futures are going to reopen and we could be rocking depending upon what comes out of this oil meeting. However, as I recall, the SPX is the exact opposite. What does the SPX say? Absolutely nothing will occur. Thanks a lot, everybody, for joining us here at TheoTrade in the weekend edition. I'm Don Kaufman, beyond all this week.